So let's do some trading, huh? Today is March 17th. Happy St. Patrick's Day. March 17th, 2016. It's a Thursday. We have a Bank of England decision. Yesterday was the big Fed meeting. Lots of things to talk about, lots of things to look forward to. Still a reason to be a currency trader. So thank you to Forex.Today for making this possible. Let's clean the place up and then get to work, huh? G'day, mate. Shall I throw a pip on the bobby for you? Ripper. Welcome to Forex.Today. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. But please always stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Hello, my name is Wayne. I'm a currency trader. I work with TradersWay.com. We want to make you a successful currency trader with skills and discipline to trade successfully and profitably for many, many years to come. We'd like to earn your loyalty today and every day through these sessions and through fabulous customer service and through fair prices and excellent execution. We do these sessions 7:30 in the morning, Monday through Thursday, and every Friday at fxstreet.com, where I am Speaker of the Year. Yeah, I don't know. What am I going to do next year? I want to be emperor. So anyways, good to have you. We did a special event for TradersWay clients yesterday. Traded the FOMC interest rate monetary policy decision and announcement, and then press conference. Some pretty neat stuff happened. I was long Euro USD, I think, 15 or 16 trades. And we were sitting right there at 112. And I let them run all the way up. I think most of them got out somewhere between 112.50 and 113. Pa-ching, pa-chow. Pa-ching, pa-chow. Nice. It was a good day. Glad we did it. How many people attended? You know, Nick says, oh, excuse me. I didn't say that at all. Nick said, do you think that the Fed is running, this credibility? I only hear that in the media. I don't even get what that means. What do you mean credibility? They get economic data, they interpret it, and then they make monetary policy decisions. What do you mean credibility? So when the Fed said they were going to raise interest rates, nobody thought they were going to raise interest rates. And then they said, we're going to raise interest rates. And they said, no, you're not going to raise. And we knew 6 months ahead. Also, when the market said they were going to raise interest rates, the Fed said, no, we're not going to raise interest rates. And the market said, no, they are. They're going to do it in February, and then they're going to do it too. I'm talking like early 2015, right? And there was this like, oh, the Fed just has to raise interest rates. They're crazy. This negligent. What's going on at the Fed? And then they finally raise interest rates. And then they're like, what are they doing? They're raising. If anyone's lost credibility, in my eyes, it's not the Fed, it's the market. So what happened yesterday? You want to talk about that? All right. What happened yesterday? Why is the dollar so weak? Because the Fed essentially cut interest rates. That's what they did. Not interest rates that have happened, but interest rates that had been planned. Wow, a window just opened. How nice. I didn't even do that. Why would my documents library just open? Weird. So anyways, the Fed had been saying that they were thinking about raising interest rates 4 times. Then they said they're only going to raise interest rates 2 times, effectively cutting a half a percent out of the Fed funds rate. And that is bearish, right? So that's all it is. They said 4, the dollar was strong based on that knowledge, right? And then all of a sudden, no, we've changed our mind. It's probably not 4, it's more like 2. And therefore, we need to weaken the dollar a bit because it's overvalued, because it used to be valued on, right? So if it's not 4, if it's less than 4, if it's 2, then the adjustments need to be made. Now the stock market took off like a rocket. Daniel's gold. Yeah, Peter says, well, wasn't it only 2 hikes priced in anyways? Well, yeah, you're talking about the Fed Fund futures, okay. And what we saw that June and December were the most likely meetings for interest rate hikes. Absolutely correct. You know, maybe June, almost for sure December, right? However, that's oh, did you lose sound? No, there it is. Wow, is sound coming and going? Wow, weird. Weird, just like, I don't know what's going on. Weird is strange, weird day, man. Technology-wise, anyways. So, is it terrible? I've already rebooted a dozen times, but so I'll just keep going, and if it's terrible, then we'll come up with a plan B. All right, over there. Okay, cool. All right, so yeah, so there was maybe a June, almost for sure December, but in between there were possibilities of rate hikes, and the Fed was saying rate hikes. So it's not necessarily, I mean, it's partially priced in, but there's also sentiment and psychological price in. But the Fed said 4, now it's 2, so it's new information, and it's not bullish dollar. Okay? So that's what that's all about. So if you ever hear something like that, like a change in policy, or even a change in sentiment for policy, or a change in whatever, I mean, it's a change. If the Fed says we're not going to raise interest rates 4 times this year, and they did say at an earlier period that they were going to raise interest rates 4 times this year, well, it's sort of a cut, basically. A cut in forecast. And I believe they cut for 2017 as well. Is it the beginning of a bearish cycle? Okay, well, let's talk about that. What would create that bearish cycle? Remember, we're not talking about opinions in the market per se, like, oh, well, that's really bad, oh, let's sell that US dollar. No, it's business, guys. It's business. Don't look at your charts like a bunch of colors and like this is a video game. Trillions of dollars exchange hands. Is that going to stop now? Like, oh, well, forget that. We're gonna the whole global economy is gonna stop working. People don't want to do business anymore. I mean, most business around the world is priced in dollars, guys. Where do you want to put your money? You know, U.S. stock market, probably. You know, is the U.S. economy tanking? No. What's happening, and I think we did talk about it before. What's likely to happen more and more at the Fed is they're going to talk about external factors. It's like, remember I said it yesterday, like 24 hours ago. You know, during our I think our session here, our regular morning session, we were talking about, I was saying things like, you know, the Fed's point of view, where it's like, it's not us, it's them. And that's kind of what's happened, right? No, we're doing fine. Yeah, we got inflation. We got the first signs of wage growth. It's not as fast as it could be, but, you know, we're at full employment. You know, okay, right? We've had 5 or 6 years for Americans to get their financial houses in order again and draw down their debt with their, you know, they get a job, pay down their debt, save some money. You know, all that's happened. It hasn't happened in Portugal yet, right? So is all of that over? No. But was the US dollar a bit overbought on anticipation of future interest rate hikes? Yes. So what it'll do, it will weaken for a while, and then we will resume the current trend, but just at a more fair market value. Okay, that's all. But is the world going to stop demanding dollars? uh, no, no, they're not going to stop. I mean, okay. So, anyways, cool. Um, you know, you got the looks, I got the brains. Let's make lots of money. All right. So where are we in the scheme of things? Do 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 do. Just identify support and resistance. Isn't this what we do every day? Meanwhile, all right, here we go. All right, cool. Well, how how about this? Google this. Riddle me this. How many emerging markets are pegged to the US dollar? Oh. Joseph, all of them. Well, yeah, okay, I'll buy that. And how many of them are enjoying the the overvalued currency? None of them. Yeah. How about this? China has a floating peg to the US dollar. China competes against Japan. Okay, so let's. This is actually the correct currency to be looking at. Okay, cool. We've done this before, but I guess it's time to revisit this. Make sure it's on everybody's mind. Okay, what's happened since July 2011? Has the USD yen has the yen increased in value or decreased in value? according to this chart. It looks pretty severe, doesn't it? Okay. So there's two sides of this coin. On the right side, the yen is getting weak, and relative to that, the US dollar is getting strong. So China competes with Japan directly. You have to decide whether you're going to buy a Chinese laptop or you're going to buy a Japanese laptop. Foreign exchange is going to play a big role in this process of whether you're going to spend a lot of money on a Japanese, laptop or get a good deal on a Chinese laptop. Well, if the Chinese yuan is pegged to the US dollar, then generally over this period, the Chinese yuan would have increased in value because the dollar increased value versus the yen. So what if you looked at this as like it was yuan yen, not dollar yen? Holy smokes. All right. Then the yen was way undervalued and the Chinese yuan was way overvalued, right? And so now there's maybe a currency war going on to maybe reset some of this. And, isn't it a coincidence that we had the G20 meeting in China like last week? And, so maybe part of this is where, Jack Lew gets back from China and meets with Janet Yellen and says, yeah, they could use some help here. I think there's collusion. And in fact, I believe there needs to be coordination amongst the central banks. So why not, huh? Maybe central bankers are just waking up to this fact. So anyways, a little bit weaker dollar. Who cares, dude? Chill out. Relax. And this will show a weakness in the idea, like a couple of days ago, we were talking about how having multiple strategies, being, a scalper, a spotter, a swing, a spot position. And if you're only a swing trader, then you suffer through, or I mean, not swing trader, position trader, you suffer through all these pullbacks. So you just hope and pray. And obviously that's not the right thing. So we were at 114. Now we're at 111, 110 and some change. Yeah, I got it. I got it, guys. So emotional. No, thank you. I appreciate it. So remember, they're thinking interest rates up in 2017. Maybe we'll find out that they're going to push that off even farther. Well, three bottoms means consolidation, Nick.
At a minute away from the Bank of England rate decision. Again, analysts are unanimous that they'll keep their policy steady, interest rates at 0.50% and the asset purchase target at $375 billion. We'll also get the simultaneous release of the minutes. Analysts are expecting the vote to be unanimous once again for the second straight month after McCafferty moved back to the Dove camp. British pound trading 143.63 ahead of the decision. It's up 0.8% on the back of overall dollar weakness following yesterday's Fed statement. Euro pound trading at 78.85. Pound weaker there by about 0.25%. Fixed British pound currency ahead of the rate decision. 10-year gilt lower by 9 basis points, trading at 1.43% ahead of the rate decision. We'll announce the rate decision and then go into the vote.
Well, yeah, did you remember talking about this? We talked about that, didn't we? That it was going to go back to the weekly?
There for the Bank of England.
Didn't we talk about that?
9-0, so second straight month of a unanimous vote. They note that a Brexit vote could delay spending and depress demand. So making a comment about Brexit that it could delay spending and depress demand. And they reiterate that a hike is more likely than not over the forecast period. Standard rhetoric there that the next rate move seems still to be a hike. They reiterate there's a range of views on both the inflation and activity front among the MPC members. They're divided over wages and they're divided over the currency pass-through.
Yeah, so I love when these things happen. So we talked about, and I might have been yesterday, I said if you hit the target early in the week, very often you come back and touch the weekly central pivot. You guys remember that? I had to stutter a little bit because usually to me it's Monday or Tuesday, and that was sort of Wednesday morning. I'm like, that's as late as early can be, early in the week, all right? That's the latest early in the week could be defined. Seemed impossible, didn't it? How remarkable, huh? Yeah, Miles says it really did seem impossible yesterday, huh? Amazing, huh? And then how about people that shorted up here, which we talked about days in advance, came down, and what if you did nothing? How about the poor sucker that didn't even realize that that was a reversal pivot? Guy feels like a schmuck now, right? Doesn't know anything about pivot point theory. So, anyways, maybe see, I like it when these things happen because it took me I don't know how many years to figure that out, to notice that, because it doesn't happen often. So, how many years does it take to say, well, seems to me I notice if we hit this early, it comes back, and how many years does that take? It's not like I read a book or something, right? So now you pick it up, and now it's yours, baby.
Just reiterating that they'll attend. We saw numerous producers announce that they'll attend this meeting in April 7th.
Buck 44, guys. Okay, so let's kind of look at some of this here. Brexit could delay some spending, depress demand. Referendum likely a key driver of pound currency. Yeah, decline. Reiterates next move when rates will likely be increased. So yeah, that's pretty bullish, right? They wanna raise interest rates. Good. I wouldn't have been shocked if they had backpedaled like the Fed. That's pretty cool. You get some more information for you. No change in quantitative easing, no change in interest rate. Yeah, okay. So that's a pretty bullish outlook, though. What they're trying to say here, if it wasn't for Brexit, they'd probably jack up interest rates earlier, huh? Well, okay, let's talk about that. Yeah, thank you, Eric. What was that, a year ago, Eric? Year and a half ago? That I said that? So we were talking about raising interest rates in the UK a year and a half ago. I believe it was in like January or February. The United States had really, really cold weather. Second winter in a row with really cold weather. Like New York City was closed. Boston had the heaviest snowfall in the history of Boston. And Boston's old. It's old, man. We're talking 1500s. That's old for America. There isn't anything older. I mean, that's old, right? Um, so, anyways, so back then, what we were talking about was, all right, things are not, let's say, at the fundamentals, the underlying fundamentals were such at that time in the UK that things were improving and probably should improve. And that when they, in a year, like 12 months from then, when they recalculate GDP, they will have to drop the bad winter data because when obviously if let's say if there's 10 feet of snow, consumer spending's low. I mean, you're not going to the shopping mall, right? You can't even get to work. I think our first 8 classes at Harvard had to be rescheduled. First 8 weeks of university had to be rescheduled, because every weekend there was another terrible storm. And my classes, I believe at that time, were on a Monday, and Monday classes were just canceled every week after week after week after week after week because it would snow all Saturday and Sunday, and then quite literally have 10 feet of snow. You couldn't even get to campus. So it was bad, right? So I said, anyways, moving forward in a year, they'll have to drop that bad number and add a half decent whatever number to it. Then at the time, Mark Carney, in charge of the Bank of England, would testify and say things like, yeah, things are really bad, but don't worry about it. Things are really bad. It's not us. Things are really bad. It's just oil prices. Yes, the data is bad, but it only appears to be bad. Right? Bear in mind, the guy running the Bank of England is Canadian. Oh, is that righty? So, pretty interesting stuff. So, when does this don't worry about it turn into action, right? And so we were guessing that based on a surprisingly good first quarter GDP, and then the IMF has to come out next month and give a positive outlook for the UK. I mean, think of this. We were talking about this like 18 months ago, or almost 18 months ago. Isn't that amazing? So that we'd get a really good GDP, just miraculous. No one would expect how good this GDP would be. And then the IMF would come out and give thumbs up for the UK economy. Everything looks good to us, says IMF. And then what? A climate of wanting to raise interest rates at the Bank of England anyways, so therefore a June hike. Right? Right? Is that about right, Rick? So what did I not foresee? Because that's a pretty big leap. But it is the right discussion, at least, to say, well, I know how to calculate GDP, so let's talk about what the calculations will be in 12 months based on our assumptions. It's just assumptions, right? Remember, we were talking about, like, this is what smart money would be doing, and we want to be smart money, so let's just do what smart money is doing. By doing that, that would make us smart money. So I'm like, now you're smart money. Thank you for being on my team, right? So fast forward, I didn't think the UK was going to leave the European Union. Was that part of your model? 18 months ago, you're like, well, no one's talked about it, but maybe the UK will leave the European Union. All right, that muddies the water a little bit. Whoa, 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 hey now. So, all right, but at least all the other things seem to be happening. And so now here we are, the Bank of England is saying, well, we'd probably like to raise interest rates in June, except we might actually leave the European Union, so that might be a bad thing. Right? Like June would have been great, but why don't we leave it to October? See what happens over the summer, because we don't know what the heck's going on with our country. Well, at least they didn't blame the Yanks for their problems, huh? Dolores, have you ever? No, I have never. So, I don't know what that was. Holy smokes. I think I fell down and hurt myself. So let's go into here. Okay. Did you play it as resistance? Wayne, you didn't tell me to short it at resistance. No, sir, I did not. Boom, 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 boom. Do, 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 do. 1.44. Oh, oh. Oh, 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 oh. Pachow! Wow, what a coincidence. So you have to look at things, decide what to do. Hey, Russia's just started drafting a budget. Well, there's something new, huh? Good for Russia. Let me ask you, what percentage of their budget do you think is going to rely on revenue from pumping oil out of Baku or Siberia? Well, at least they're in better shape than Venezuela. If you want to hear a horror story, not about ghosts or demons or such, um, look up petrostate or Dutch disease and figure out how to. It's basic. Here's the story of those two things. It's like winning the lottery. It ruins a lot of people. So Venezuela won the lottery, and probably the worst thing to happen to Venezuela. Okay, little kick move, boom. We got a double whammy here. We got the psych level pivot, but I wouldn't worry too much about that. Yen is weakening nicely here. Probably want to buy the stock market. What do you think? I want to move to the S&P 500. There's a buying opportunity. There you go. Is that right, Charles? Yeah. And that's what happens. So yeah, seriously, look for a book or Google petrostate or Dutch disease. And of course, a real positive, amazing story, the opposite antidote, I guess, is look at what the Norwegians did when oil was discovered in the North Sea. And it's a brilliant story. And it's only because they said, well, we run the risk of being another Venezuela. So Venezuela already had led the way and had already destroyed itself decades ago. And then Dutch disease goes even farther back. And so Norway suddenly wins the lottery and does almost the unthinkable, smart, positive, intelligent, logical thing to do, which we know in any scenario on our planet is pretty remarkable. Right? Because you think of it like, I don't know, Saudi Arabia, one of the richest countries in the world, sits on another 150 years worth of oil, and what, 40% unemployment? Well, why is that? And then you have to ask, well, why is the UAE, and specifically Dubai, what the hell's going on with Dubai? Why are they building all this stuff out in Dubai? Well, they're trying. It's a bit of a mix, really. It's hard to really say. Obviously, they're spending income from oil reserves, and they're getting a lot of support from Abu Dhabi, which is kind of like the New York City of the UAE, and Dubai is more like Los Angeles of the UAE, where all the movie stars are. But they also realize that they're going to be out of conventional oil basically now, and that they need an industry. They need something when the oil runs out. They need to be able to have something to show for it. And maybe, hopefully, potentially, right, the royal family would like an industry. So they're trying something different, but it's close though, because like Venezuela gets into trouble when they do things like put the entire country on welfare, right? And and then build a giant statue of Hugo Chavez made out of gold, and then and at that point when they did all that, they were already broke. So they're like, well, we'll just borrow the money. Doesn't matter, we got all this oil revenue. Yeah, well, what happens when all that stops? And you have 150 years worth of debt, and now you're broke. Well, it doesn't get any easier, right? So now how do you pay for your debt? Oh, we'll just print some money. And don't worry about it. We'll just print some money. And that's how you have a contracting economy and 700% inflation. See, inflation's supposed to be when the economy is growing too fast and everybody has too much money. Everyone's working, everyone's getting raises, all the companies are profitable, the stock market keeps going up, housing market, and everyone's just getting filthy, stinking rich. Versus absolutely, totally dead broke and borrowed, all your credit cards maxed, right? And then you're writing IOUs for everything. That's a different type of inflation, isn't it? That's what Venezuela's in. So, I don't know. So do you see it here? Now watch this. Wait for it. Boom! Or how about this one? Boom! Yeah, let's do this one. Okay. Yesterday, this would have been a short. Because I think we had that 4-hour rolling. Look how it reversed at a pivot point. Wait, I thought the world was going crazy because of this unexpected Fed move. Let me ask you something. Does that look crazy to you? And I'll answer it. No, it does not. And what kind of pivot point is M4? It's resistance. In fact, it's the conservative bullish target for the week. Actually, that's monthly. Sorry, for the month. So when did the month start? It started here. Okay? So on the beginning of the month, the conservative bullish target was here. Well, that's here. How funny, huh? When we were here, conservative bullish target was there. Yeah, so let's go back to that. All right, yes. So you need to make a decision on what to do with this. And I keep pushing this out. I'll do it again today. I'm sure tomorrow will be very similar. You have to decide whether you're a bull or a bear, not now, some other time like yesterday. So you need to be figuring this out for tomorrow or next week. But if you're a bull, this is going to be bullish. The next area is going to be here. So you either buy it here or you buy it here. So when you get there, drop into a small time frame, look for the move. Now, what the issue here, okay, is that this is a downward cycle on the Stokes in an uptrend, and you don't really use oscillators in a trend, do you? You use them in the range-bound situation. Okay, if you want to get a little more advanced here, you see things like divergence and such. Okay, and that to you might be bearish. Well, then good, set up a bearish trade, but it wouldn't be here. You understand? So sometimes you could just simplify things. Let's say you're not very good at fundamentals, and I don't know. You need to do things like, are we at support or resistance? Even if you're no good on fundamentals and long term, whatever, you can at least say, well, that's not resistance, that's support. So the first thing you should say is, I can't sell here. Okay? We got that for sure. That's that. Do you sell at a 4-hour 21 in an uptrend? Are you stupid or something? You could, and maybe you make money. It's incredibly high risk, and you're probably not in control of your trading. Probably. But if you sold it, it can go down. It's the likelihood of whether it's going to go down or not that I'm concerned with. So I may say, look, we're at a 4-hour 21. I don't sell at a 4-hour 21 in an uptrend. I don't. I can't. It's against the law. It's against of my rules of engagement. Okay? Well, what could I do? I could buy. It might be a place to buy. It might not be, because it might fall, because I don't really know what it's going to do, right? So I'm like, wow, I can't sell here. I see the divergence. It really could fall down to the next level. It is a reversal pivot up there. Maybe I don't use monthly. Maybe I don't see this one. Whatever. So I decide I'm going to buy this, let's say. What do I do now? Do I just pull the trigger? Pray? No. Question mark? Nope. Wait? Nope. Go lower time frames. Thank you. How about we'll do a 15? How does that look? Does that say up or down? Roger that. Permission to engage. Yeah. Does it mean pull the trigger? No, do. So now what? I just have permission to engage. Mission is a green, right? So I got the green light. It's a go. Drop into a fiver. Drop into a 60-second. And maybe you look for something like dun 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 dun. Dun 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 dun. Do you remember a couple of days ago when we were at 2,000? Right? I slapped you in the face and said you should probably buy it. Well, even in this situation, we're at 2020 looking up. But anyway, so like maybe you're taking a shot there, yo. And why is that interesting? You don't see it, but let me put a little line here. What does this arrow represent? Let's draw it like that. What does this arrow represent? Higher high? No. Trend? I want something specific. 50%? No. Market direction? No. Up? No. Get specific, KC. Channel? No. Support? No. Higher low? No. Spot to enter? No. Divergence? No. Good. Thank you guys, though. Awesome. I mean, awesome. Retracement? No. Neckline? No. The 4-hour 21. Oh, that's where we started. Uh-huh. So what if this turned north? I'm not saying it will. I'm saying what do you do if it does? That's a big difference, right? Does the 15-minute say it wants to go up? Well, maybe it goes up at least for an hour or two, right? I don't know. Question is, did you set up an ambush? Were you just walking through the jungle looking for a fight? Hey, who's around the corner? Right? Who's around the corner? Well, I don't know. I'm just kind of walking through. Maybe I'll find a platoon. Maybe I'll find a battalion. I don't know. It'll be exciting when we get there. Yeah, that's not how that's not how you win a war, is it? You should have an unfair advantage because you're there before the enemy. You've set up plans. There's traps. There's crossfire positions. You have the higher ground, and it's just unfair. And you unleash hell, and then 10 minutes later you pack up and go back to base alive. All right, so Miles, I keep wanting to call him Milos. Miles wants to wait for this. Okay. And no permission here. And why is that? I'm not saying you're right or wrong. I want to know how you're reading it. Horace says, could you use the 5A cross and the 15? Yeah. What I'm trying to teach you is how to get in 10 pips before that. Okay? Because very often what happens is by the time it crosses, you enter at the top of this big candle, and then it drops like a ton of bricks, right? So I used to show this thing where, you'd get a 5A cross, like this, and on the first test, it doesn't ride the 5, it comes down to the 8. then comes up, and then rides the 5 on that one. Okay? And so where we are now is we're talking about this candle right here. Okay? But if you're at support and you're anticipating, why can't you just get in a bit early? And that's what the ambush is. If you're pretty sure it's going to go up anyways, then why don't you get in early, right? How's it looking? So that's done in real time, second by second. Yeah, we got some nice yen weakness. Yeah, what does that mean to you? Well, why am I looking at the S&P 500? Because the yen's told me. Okay. And remember, it's common knowledge you can't predict what the stock market's going to do. So I'm going to pull the plug here. Maybe it's only about 10 minutes early or 15 minutes early, but I'm going to make it a short one. Yeah, I have a sad, sorry excuse. I have a touch of stomach flu, so I'm enjoying the experience of that, which leaves me only in my chair for short bouts of time. But at least I'm a complainer, right? At least I'm a complainer. Oh, woe is me. But whatever. But that's that. Oh, don't you just love trading? It's a good drug, isn't it? You're my drug. So anyways, peace on earth. May the pips be with you. May your profits be above average. I'm doing an interview today at fxstreet.com in their live trading room. I'm being interviewed as Speaker of the Year. And that's just after 10. You're welcome to swing on by for that. And then tomorrow I am doing my weekly webinar at fxstreet.com. You're welcome to do that as well. And if I don't see you again until we meet again on at Forex.Today. That will be on Monday. So if I don't see you, then have a wonderful weekend. But hopefully I see you later today and tomorrow. Yeah, the Philly Fed, you're looking at that. Yeah, 12. But, it's Philly. It's Philly Fed. It's volatile, right? Like, think of this. If they thought it was negative 1.5, but it came out plus 12.4, clearly they can't. They can't. Uh, it's so volatile that they can't even come up with a rough idea of what it's going to be, right? But it certainly doesn't hurt. Yeah. So catch you guys later. Thank you again for being on my team. I really do appreciate you and your loyalty and your efforts. Cheers.